Thanks for everyone for being here. I'll give you a quick overview of Sarama Resources. We operate in West Africa in Burkina Faso. A few forward-looking statements, I'll let you read them at your own leisure on the website. Sarama as a company, we've been around for about 9 or 10 years. The management of Sarama actually used to run Moto Gold in the Congo. After that was taken out by Randgold, we put this company together. We focused in on Burkina Faso, where we've got 2 projects there. We've got an advanced stage exploration project. It's kind of in that transition zone, going from exploration through to pre-development, and another very good looking project about 80 kilometres to the west that's early stage exploration. Our main focus though is the southern part of the Houndé belt, where we've got a couple of project areas there. We just basically call it the Southern Hound project area. It covers about 1,300 square kilometres. Across the couple of projects that are joined there, there's about 2.5 million ounces. We've got about $3 million worth of drilling to do there before we actually put a pin in the resource and work out what the appropriate development path is going to be. At the moment, it looks like it'll be a staged development, around 100,000 ounces a year. Probably about $100 million to put that into production. The Southern Hound belt itself is a prolific gold producing belt. You've obviously got Semafo's Mana, you've got Roxgold Yaramoko, Endeavour there with Houndé. You've got Teranga very active with their discovery at Golden Hill. Obviously Sarama with our position there, and also Semafo has been very active in the area as well with some new discoveries. As far as Sarama on the corporate side goes, Silver Lake Resources in Australia took a 12% position in us last year. Some people kind of saw that as odd, but they looked at the risk-reward ratio on the company. They know the management very well and how we operate, and they supported us moving forward. Just briefly on the management, we've got a very experienced board and management team. We've all been kicking around Africa for a long time. The skills mix is probably a little different to what you'd see on most TSX listed companies in a junior. My background's mining operations, worked managing mines in Australia before going into the overseas market in Russia and Africa. Sean Harvey's the chairman of Perseus Mining, so he's been chairman of them for a while. He's also the chairman of Victoria Gold in the Yukon. So Simon Jackson, who's sitting in here, is running Kapoor Minerals, which is a copper play, and I think he's speaking shortly. Simon was also involved with Redback and the Lundin Group as well. So we're all founders of the company, and also Dave Groves, an exploration ex-Newmont guy based in the US. So from the board point of view, we round out from exploration through to production, finance and project development. We've got the mine finder in there, Jack Hamilton. He's the guy that found the Kibali deposit in the Congo. Paul's a mining engineer. He puts a lot of forward thinking into what we do, plus looks at corporate opportunities. And then Louis worked in the DRC and other countries in Africa. So the capital structure is still fairly clean. Managed to do most of our raises without warrants. The few warrants that are there are more to do with corporate things we've been doing. Burkina Faso, probably won't dwell a lot on that except to say that we work in the southwest of the country, and from a geopolitical point of view, I think it's important that you understand the granularity of what's going on in country. It's obviously caught a fair few headlines lately for the wrong reasons. If you look at where Semafo are operating, where they had their problems, it's right over in the east of the country, which has kind of been a challenging area for a long time. The southwest though is a different demographic and a different setup, and that's where we work. The last drill program we did in December last year was uneventful, and we just work away down there, as are Teranga and Endeavour. As mentioned, with 2 projects, so the more advanced projects in the South Hound area. It's 100% owned, covers around 1,300 square kilometres. It's about 2.5 million ounces between the Bondi deposit and the South Hound deposit. We have visibility to a mine production, and the planned exploration we're looking to take the total resource through 3 million ounces. And then Kumandara is also 100% owned, much earlier stage. The development, 2 development concepts, and really it depends where the next round of exploration lands us. We had in a position now to build a heap leach that's got very high internal rate of returns, low capex, sub 1 year payback, burns bright but not that long, so around 80,000 ounces a year for 6 or 7 years. The preferred development routes are two-stage CIL, where we treat oxides initially, upgrade the front end of the mill, and then treat all the high-grade free milling fresh. Both those concepts we've worked up at $1,200 gold, so they both work well at that gold price. So for us, really, it's the work's about $3 million worth of drilling to determine which flow sheet we're going to use. So looking at the base case for development, you'll see we'll have a central processing facility at the South Hund project there. Then we'll truck material in from the satellite deposits. So anyone who's familiar with the Eastern Goldfields in Western Australia, it's a fairly typical development model for there. You have one large deposit providing the base load, augmenting that with higher grade satellites. The oxide performance on the South Hund's very good. We've done column leach work on that. That'll give 87% recovery in columns, so we expect that to perform well on a heap leach, and likewise Bondi's kind of mid-90s recovery in the oxide and free milling. We do have two flow sheets to follow there. The fresh on South Hund is fairly high grade. It's sulfidic, so that needs a bit more work on it. But the run-of-mine grader, that'd be about 2.5 grams, so it carries a little bit extra cost to make that viable. As far as the resource area growth goes, there is extensional and infill work to do on the South Hund project. And then we have the Jarkadugu property where the Bondi deposit is. That's going through a reissue process. When that's done, we'll go back. We've already extended Bondi by about 700 metres, but our best drill target sits about 4 kilometres away. I think the other point to note in this particular image is that you'll see where Taranga's Golden Hill project is there, and we flank that on two sides, to the east and to the south. The Bamako permit that you see on the east there, we've just finished drilling that in December. Our best drill hit in that was 8 metres, 18 grams a tonne, so it's a high-grade quartz vein system. We do have a lot of good historical hits in there, so there's more work to be done on that ground. But you'll see where Golden Hill's positioned. You'll also see Semifo. They've got a new discovery there, Bantu Nord, which really, from a logical point of view, all of that should come together. And then there's another project there, Karankasso, which is a joint venture between Sarama and Semifo. We own 20% of that. Looking at extensional work, I won't kind of dwell on this much, except for the first lot of drilling we did on this. Acacia Mining were a joint venture partner on this for 4 years, which kind of slowed things down. They didn't do a lot of work after their problems in Tanzania. We bought them back out of the project last year, so it's 100% ownership. So after that, we've managed to push the project forward. This is an example of some of the drilling we've done, where we've drilled off flat structures that have a much higher tenor than what we've seen before. Likewise, the 3B project, which I just touched on with Bamako, where we've been getting high-grade hits in quartz veins, and likewise with Bondi, where we're looking to extend. As far as the project roadmap goes, there's a series of stages, about 6 months of drilling to do just to put a pin in the resource. Then we'll do a resource update, do an option study on which process flow sheet we use, as I said, which is most likely a CIL. Then we'll crystallise that into a PEA. So that's about 12 months worth of work and about $5 million US to get that done. So really, Sarama, fairly heavily sold down, obviously after the events in Burkina Faso. So I think the risk is definitely built into the share price, but the company represents a lot of optionality, whether it's from a strategic and M&A point of view, exploration and mine development. So I think that's really the takeaway, that the company does have a lot of optionality and a lot of value sit within it. Thank you very much.